Kaylee, what do you see in terms of the markets?
Well, of course, a lot of markets aren't open today, Matt, as it is the day after the Easter holiday. That means pretty much all of Europe is closed and a lot of Asia was closed as well. Two markets, though, that were open for trading, Japan and China. Both of those equity markets moving lower. Japan down 1% and China down about 0.5%. Of course, the big story out of Asia overnight was the economic data from China. You did have GDP growth surprising to the upside, 4.8%, but that doesn't fully reflect the lockdowns that went into place in Shanghai and other areas of the country starting in mid-March. Plus, you had the biggest decline in consumer spending and the highest unemployment rate since all the way back in the depths of the pandemic in early 2020. So that weighing on risk sentiment in China, not weighing too heavily, though, on the Chinese yuan, which is actually fractionally stronger against the U.S. dollar, trading right around 637. And the dollar, though, stronger against the Japanese yen. Once again, the Japanese yen at its weakest since 2002, trading right around 126.61. You have Kuroda out of the BOJ is starting to ramp up his warnings on the yen, talking about how rapidly this move has happened. Maybe a bit of a verbal warning there. Now, as for the picture here in the U.S., of course, we will be open for trading today. It does look like it will be a down day for U.S. equities, at least judging by the action in the futures market, with futures down across the board. But it is big tech in particular that is lagging. NASDAQ 100 futures down about 0.6%. Of course, the bond market was open for cash. Trading treasuries were in Japan overnight, but that closed around 3 a.m. Eastern time. So while we were up about 3 basis points in Japan, 286 on the 10-year, that's where we've been for about 2 hours now. Cash trading and treasuries will reopen later on this morning. Then we have some other risk assets moving lower, Matt. You have WTI moving down today about a quarter of a 0.25% or so. 106.68 is where we trade on a barrel of crude. And also risk sentiment, the lack of it really weighing heavily on Bitcoin. It is back below the $39,000 level, down about 3.5% in the last 24 hours or so, Matt. It, of course, is at its lowest in about a month.
Yeah, it will be interesting to see if the Easter market closures or also a spike in COVID cases can slow the market down a little bit today in terms of volume. Let's see what's going on this week. As I said earlier, Bank of America is going to be the last of the big Wall Street banks to report results today. That's before the bell. Tomorrow, Netflix kicks off the big parade of tech earnings, and Tesla's results take center stage on Wednesday. Also on Wednesday, Emmanuel Macron and Marine Le Pen face off in a live televised debate before the second round of the French presidential election. And on Thursday, Fed Chair Jerome Powell, ECB President Christine Lagarde, as well as Indonesia's finance minister, all three take part in a discussion on the global economy hosted by IMF, and you'll be able to see that on your Bloomberg terminal. Now, China reported its biggest decline in consumer spending and worst unemployment rate since the early months of the pandemic. Investors are now adding pressure on policymakers for more stimulus to help reignite the recovery. Bloomberg's Kriti Gupta joins us now to give us the latest. Kriti?
Yeah, well, we were going into Friday talking about a reserve rate requirement ratio cut and a rate cut as well. There's supposed to be stimulation kind of measures, and you didn't get that when it came to the equity market. You actually saw declines on Friday. You also saw everything ending about flat when you come to the Chinese market as well. So that puts the new focus, especially when we talk about declining consumer spending that Kaylee was just talking about, and now COVID continuing to spread as well. I believe 3 deaths now reported in Shanghai coming out of the bigger outbreak that officials were trying to contain. So now they're trying to put the focus on the loan prime lending rate, which is coming on Wednesday. And the idea here is that this is a rate that essentially becomes the de facto benchmark lending rate and actually affects the property sector, which we know the consumer spending sector has kind of dropped. The Chinese consumer isn't as strong, but lucky for the Chinese economy, they don't have to be, right? Because this doesn't have the same impact to, say, the American consumer does, where they do have a little bit more impact as the property sector, and that's really where that loan prime rate really matters.
So that's the growth story in China. Kriti, let's talk about the growth story here in the U.S. Goldman Sachs out over the weekend, putting 35% odds on a recession over the next 2 years. What can you tell us?
Well, Jan Hatzius over at Goldman coming out and increasing his recession odds to 35% over the next 2 years. As you said, Kaylee, this is really significant because, once again, 35% is by no means a majority. But what he does rely on is essentially historical precedents here. He's talking about historically large declines in the gap between job openings and workers has never been this large. And in tightening cycles, we've had about 14 since World War II. 11 of them have seen recession within 2 years. The difference, though, is the are those recessions comparable to the recessions we've seen since the global financial crisis? Of course, they don't take into account the impact of QE and therefore consequentially QT. And remember, Kaylee, going back just a couple years ago in 2016 through 2019, that latest tightening cycle, you didn't actually see as aggressive as a market impact as you did in the previous recessions and previous tightening cycles before. So the question here is, which precedent do you follow? Jan Hatzius is really saying that 35% is what he's sticking with.
Yeah, saying that historical patterns suggest the Fed's facing a hard path to a soft landing here. Thank you so much to Bloomberg's Kriti Gupta. Now let's turn to geopolitics. In Ukraine, defenders of Mariupol have been encircled by Russian forces, but have not surrendered the port city. Ukrainian officials have warned of a possible naval landing operation and additional airstrikes. Meanwhile, President Volodymyr Zelensky says he hopes President Biden will visit to survey the devastation from Russia's invasion. Emily Wilkins, Bloomberg government reporter, joins us now from Washington. Emily, what are the odds that President Biden actually makes that trip?
Well, we've heard President Biden say that he would like to go to Ukraine, but we've also heard from the White House that there are security concerns and that they don't at this point expect either Biden or Vice President Harris to be going. We have heard that they do want some sort of senior official from the U.S. to go to Ukraine. Obviously, we saw UK's Prime Minister Boris Johnson go the other week. We've also seen Zelensky go ahead and reach out to French President Emmanuel Macron for asking them to also come and to visit. And I think it's going to obviously be something to see what happens with security, what happens with the next few stages of this conflict as to who is going to be going from the U.S. and whether Biden might be taking any sort of trip in the future.
I wonder about financial support here for Ukraine. It looks like they're looking for more of it from Washington. What are they going to get? What are they likely to get?
Yes, we're going to see Ukrainian finance officials coming to Washington this week. They're going to be speaking with the IMF as well as the World Bank, asking for more financial support, for more humanitarian aid. Right now, Ukraine's running about a $5 billion deficit each month just because of the conflict that's going on right now. We also have heard reports that the World Bank is planning a $1.5 billion package to aid Ukraine in the coming weeks.
All right, Emily, thanks very much. Emily Wilkins there, Bloomberg Government in Washington, covering the story for us. Now, back to Wall Street. Bank of America will report its first quarter earnings today, with analysts and investors focused on the outlook for loan growth. Let's get more with Bloomberg's Wall Street reporter, Shonali Basak. She joins us here in the studio. So, Shonali, the last of the big Wall Street banks reporting today. What are we looking for?
Well, first of all, we know that Bank of America is expected to really benefit from rising net interest income. But Matt, how does that hold up in the face of inflation? And as Jamie Dimon calls it, the storm clouds on the horizon. What does the consumer look like into the second half of the year if they don't respond well to those rising interest rates is of key interest here to investors.
Meanwhile, elsewhere in banking, Shonali, tangentially related to the Twitter saga and Elon Musk, who really wants to buy that company, the banks have chosen sides. Who's on which one?
Yes, you have three of the biggest investment banks tangled up in this saga. You have Morgan Stanley, no surprise there, advising Elon Musk. Elon Musk, the man who runs his family office, is actually a former Morgan Stanley banker. Morgan Stanley has given billions of dollars really to Elon Musk in the form of loans here. And Goldman Sachs is over on the side of Twitter. Goldman Sachs was the lead underwriter in Twitter's IPO. Twitter's former CFO and current CFO came from Goldman Sachs. And Twitter has also added JP Morgan, a bank that's not been afraid to tussle with Elon Musk in the past. We know Goldman Sachs has worked with Elon before, but when it comes to JP Morgan, they've actually been in a lawsuit regarding stock warrants when it comes to Elon Musk and Tesla there. So it will be an interesting drama, as you know, Kaylee.
A lot of players involved in this. Thank you so much to Bloomberg's Shonali Basak. And I would point out Twitter shares are actually higher by about 2% in pre-market trading this morning as the saga continues to play out. As for some stocks also moving in pre-market trading, I want to talk about the other company Elon Musk is involved with, and that is Tesla. Shares are up about 0.5% in pre-market trading. Reports crossing less than an hour ago that it could restart output at its Shanghai factory as early as later today. It, of course, has been closed for several weeks due to the lockdown more broadly in Shanghai. But Tesla about to put into place measures including sleeping bags and mattresses for workers at the factory to actually sleep there, operating on a closed loop system. So Tesla is moving higher. A lot of other stocks moving lower early on today, though, including those tied to cryptocurrencies. I was talking about the losses for for Bitcoin around the lowest level in about a month. That is translating through to some of these equities, including Coinbase, the cryptocurrency exchange. It's down about 1.7% before the bell. And also down before the bell, pretty much all of the travel complex. That includes cruise lines like Royal Caribbean. It's down about 1.6%. And the airlines under some pressure as well, Matt. American down about 0.6% in early hours.